Thank you very much, Paul. Thank you, Nick, and thank you, ladies and gentlemen, for joining today. And a special thank you to the Pilbara Minerals shareholders that are participating today. It's really nice to be with you. And what I'd like to do today is take you through a couple of key slides that are going to address our current rate of production, what we're doing at site. We're generally pleased with performance there. I'm going to take you into a really quick discussion about the Altura acquisition. I'm very pleased to have had that complete during the current quarter as it relates to the purchase and the balance of the fundraising. We're also going to talk a bit about the market, and as Paul's quite rightly pointed out, there's a fair bit of action going on there. So I'm pretty keen to address some of the key drivers and what we see being current news, and for that matter, the general direction in the market. And also offer a few comments about what we're doing and what we're targeting in respect of our expanded production capacity, of course, now inclusive of the assets acquired from Altura Lithium Operations. Many of you will be familiar with the Pilbara Minerals story, and thanks very much for following us over the years. But for those of you that don't know what we are up to, we've built one of the next generation lithium raw material projects in the Pilbara region of Western Australia. As the crow flies, we're about 100 kilometres due south of Port Hedland. The Pilbara generally, and Port Hedland more particularly, a fantastic mining province, incredibly well supported by amazing infrastructure. For those of you that weren't aware, Port Hedland is the world's largest bulk minerals port. And as a result, we've got a fantastic location for one of the world's great lithium raw material projects. And the combination of the scale in the resource, our location, the grade, the recovery characteristics of our project means it's one of the really important production centres for lithium raw materials around the world. And of course now we've had the opportunity to aggregate the greater Pilgangoora project, now with two production centres, Plant 1 and Plant 2, both of which have combined production capacity of approximately 550,000 spodumene concentrate tonnes. Really some serious scale, with more to come based on the fact that we're likely to continue to keep expanding the operation over time. As a result of that very large scale, massive production capacity, location, great jurisdiction here in Western Australia, we've attracted some fantastic partners to the project in the form of key investors and offtake counterparties, with the potential to introduce plenty more important counterparties over time. And they're here because it's one of the great projects around the world. We've been through this period where lithium raw materials pricing has been tough. There's no two ways about it. The last couple of years have been a hell of a journey. But in that period of time, I'm really, really proud of what the team has achieved. We've been through a period of moderated production, so we deliberately pulled back from the market so that we fundamentally weren't oversupplying. And in that period of time, we continued to work on our production facilities. And as a result, we now have an amazing plant at Pilgangoora currently in operations. Industry-leading product recovery, typically day to day, well into the 70s now. And as a result, very, very low cost. So a couple of quarters now where we've been approaching $350 per dry metric tonne landed in China. With respect to that cost base, it's a cash operating cost inclusive of all of our operating costs for a delivered tonne to China. So in that respect, you can largely compare the cost of production against the price received. And yes, there is some action going on there with respect to the price received. So in the December quarter, we landed those tonnes in China for $351 a tonne. Pricing in the December quarter has not been that attractive because back then, pricing had not yet moved. But fortunately, we're now seeing some evidence to indicate that pricing is moving, and we're going to be able to take advantage of that really competitive cost base against a materially better price. Record shipments in the December quarter. We shipped about 74,000 tonnes, I think, from memory, above our guidance, and actually a record for the company in the period of time that we've been operating. So the overall trend as it relates to our production now is increasing production in line with increasing demand from customers. So we've turned a corner in lithium raw materials markets. Demand is materially improving, and that's now being reflected in the price that we receive. So we're certainly a lot happier now than we were, say, 12 months ago. At our Pilgangoora Operations, we've now got the opportunity to operate the combined assets around the Pilgangoora project through the acquisition of Altura Lithium Operations. And on this slide 8 in our pack, on the right-hand side, we're showing how, the key proximity of all those facilities. In fact, between the two production centres, it's approximately they're 3.5 kilometres apart. And the ore zones travel across the previous tenement boundary between the two projects. So the ability to aggregate the two projects, join them together, now creates a materially larger, more flexible, and ultimately, we believe, lower cost operation for decades to come. And given the scale in the resource, now approaching some 270 million tonnes, our expectation is that that will translate to bigger pit inventory and either much longer mine life and or increasing production capacity. With plants in such close proximity to each other, of course, there's also some amazing synergies that start to emerge between the two operations. And they are many and varied, none the least of which is being able to access new ore zones adjacent to the tenement boundary, being able to aggregate up economies of scale, whether it's in mining, processing capacity, haulage, shipping. Larger ships means lower cost. The speed with which we can bring the production back to the market, given that the Altura operations are already there, albeit in care and maintenance. And also, generally, just being a larger operation facilitates more appeal within the market. And by that we mean both lithium raw material markets, where customers are looking for more tonnes, but also for the purpose of investment. So out of all that, we think an incredibly well-timed acquisition, given that market conditions have now turned. We'd like to think that we've bought those assets at the bottom of the market, and as a result can take advantage of improved market conditions, which are now patently the case. So very happy with the end result, and looking forward to being able to bring on more capacity as we bring out the Altura Lithium Operations out of care and maintenance, as the combination of demand and price conditions or price outcomes dictate that we should start those operations. But to be clear, and we've made it very, very clear to the customer base, we'll only restart the Altura Lithium Operations when the combination of demand and price conditions are right. There has to be an incentive to bring those operations back into production so that we can take advantage of the additional capacity and, of course, so that our shareholders can take advantage of a reasonable return. We make for a materially larger operation. So on this slide, we've aggregated on the right-hand side the resource base, approaching 270 million tonnes as of the last statement from Altura and our most recent resource statement. And then in terms of production capacity, about 550,000 spodumene concentrate tonnes, making it one of the larger operations around the globe. In hard rock terms, on an SC6 basis, so 6% spodumene concentrate basis, only second to the Greenbushes operation in terms of installed capacity as we sit here today. So really material acquisition for Pilbara Minerals, and very, very pleased to have it completed during the quarter. Okay, let's talk about the market, and there's a lot going on here. On this graph, we've plotted the various subcomponents of lithium chemicals and spodumene. So the dotted lines represent domestic pricing in China. So that's the price as surveyed amongst purchasers or sellers and purchasers within the Chinese market, so on mainland China. And what you find in the Chinese market is that it's a much more volatile market. consistent negotiation going on between typically one buyer and one seller, and constantly renegotiating month on month, or if you're lucky, every couple of months, maybe once a quarter. So that's the price being discovered, and it creates quite a volatile pricing outcome. Now, the general theme in that graph is that the price has obviously deteriorated over the last couple of years, but from August last year, a pretty material turnaround such that today the price is at least 100% up. So it got as low, lithium carbonate pricing got as low as, let's say, roughly $5,000 a tonne. Today, easily greater than $10,000 a tonne. In fact, most of the pricing reporting agencies are now behind the market because the market is moving very, very quickly. Price reporting at a chemical level, I would say, is about 2 to 3 weeks behind the real market. So pricing conditions are materially improving domestically in China. And that's starting to be reflected in international pricing, which is the blue and the orange line, solid line, on the graph. And you can just see that started to turn. And that's also good news. That's an indication that demand conditions both within China and the rest of the world are now moving back into positive territory. And then, last but not least, how does that reflect in spodumene pricing? Well, I'm pleased to say that spodumene pricing has now well and truly bottomed. And in price outcomes, we are starting to see that be reflected in the price that we receive. Whilst there is some lag, the lag is approximately 2 to 3 months, we're now starting to see a decent uptick in spodumene pricing, to the point where we're opening up, we think, reasonable operating margins through our Pilgangoora operations. And there's reason to be optimistic. I'm going to delve into the market in just a little bit more detail to try and explain what's really going on, and why these improved demand conditions are emerging. And there's a couple of key drivers. The big picture themes are demand conditions improving within China, so domestic conditions in China itself, but then also international conditions for lithium raw material demand, but in particular, lithium demand as it relates to batteries. So the top picture is the European plug-in electric car sales, and 2020 was a formative year. The year where the EV sales took off, and especially in the second half, to the point where by the end of the year, Europe was actually the world's largest EV market, having overtaken China. And as it stands today, I think you find Europe and China are probably, basically line ball, basically, as to the scale in their markets, but they're both becoming very, very significant large markets. And of course, Europe being ex-China is an important driver. So big European EV sales translates to increased raw material demand, but in particular from within China, because China is really the only growth game in town in the short term. That's also good for spodumene because European car sales are typically going to have high nickel or higher nickel cathode chemistries in them. And that's important as it relates to spodumene demand. So that's the first key theme. The second key theme is China itself and the domestic demand conditions, which have vastly improved. Bottom right is on that slide is the effect of EV sales in China. And again, they've had a very, very strong year, and in particular the second half. Again, a key driver to lithium raw material demand, but it's not the only story. So in China, there's sort of multifaceted demand growth emerging. Strong EV sales being one. But the other is the scale in the addressable market. And what I mean by that is that the addressable market in China is getting now very, very large because the cost of the cells is very, very cheap. And in particular, lithium iron phosphate batteries. So LFP pack technology has improved. They're packing more energy density in. They've been very successful for application in EVs. Further, stationary storage is now a big theme in China, and that's definitely one to watch. The cost of the batteries means they can be applied for stationary storage on a micro scale and on a macro scale. And lastly, eventually, it had to happen, lead acid battery replacement with lithium iron phosphate batteries is also a key driver to lithium demand. They're all really important dynamics. Keys to improving pricing, which is very, very evident now, and of course, increasing demand. So from Pilbara Minerals' point of view, we respond by continuing to ramp up our existing plant capacity, and we consider what we do with the Altura assets over the coming months and quarters. And hopefully we'll have more to say about that in the coming couple of months. So that's the general market conditions. And just one example to highlight, CATL, an important partner to Pilbara Minerals, but you can see that they've been making huge investments in their battery making capacity in response to demand conditions as they arise within China, but also overseas, given CATL's presence in especially European markets, but to a certain extent US markets. They are very heavily investing in battery making facilities. Just in the last month or two, having announced another $3 billion investment in further battery making capacity. We expect that CATL's battery making capacity will be in the order, I know it sounds incredible, but will be in the order of 400 to 500 gigawatt hours within approximately the next 3 or 4 years. It's a pretty incredible number when you consider that people thought a big battery factory was 30 gigawatt hours only a couple of years ago when CATL built their gigafactory. So incredible scale emerging, and we believe that Pilbara Minerals is well placed to be able to take advantage of the industry's growth. Other important partners participating with us include Ganfeng, Great Wall, POSCO. We look forward to growing the relationship with them, and also financiers in the form of the Clean Energy Finance Corporation and BNP Paribas, who've been big supporters of Pilbara Minerals with refinancing during the course of 2020, which has been very, very helpful to our business. So where do we go from here? Well, we'll continue to focus on our operations, the integration of the Altura lithium operations, considering our response to improving demand conditions with higher production capacity, but in particular, bringing back on the Altura plant, and that's under consideration now. Given the scale in the resource, the scale in the reserve, of course, we have the ability to continue to grow production from there. Approximately 550,000 tonnes with the 2 plants at Pilgangoora, but the ability to grow well beyond 1 million tonnes per annum of spodumene concentrate capacity as the demand conditions and, of course, pricing conditions incentivise us to bring on additional capacity. An important consideration for us in the future is the ability to diversify our participation in lithium raw materials. And with that, we have plenty of options that we consider as we continue to think about the growth within our business. The first of those, the relationship with POSCO, for which we hope to have more work completed during the course of the current half. Sustainability initiatives are a really important part of the growth of our company, and we've got some fantastic initiatives underway to look to continue to target a lower carbon footprint for spodumene in the supply chain. And again, we'll have more to say about that in the coming months. Thanks again, everyone, for your participation today. A pleasure to be with you, and I look forward to some of your key questions. Thanks, Paul.
Ken, one of the questions that's been put to us is that we're in the midst of the Chinese New Year, and that might put some bit of downward pressure, if you like, on the price if things are a little bit softer. Is that the case? And if so, do you expect there'll be more upward pressure as the Chinese New Year period draws to an end?
Yeah, my reading of the tea leaves for this year around Chinese New Year is that there was very, very strong demand conditions leading into Chinese New Year. Chinese New Year really is a downtime in China, so not that dissimilar to our Christmas period. So not a whole heap of work goes on, in which case you'll see flat pricing through the Chinese New Year. But the demand that we see coming out of principally China in respect of our product, but also international sourcing via the China supply chain, to me indicates that demand conditions are going to be very strong this year. In which case it would not surprise me in the slightest if pricing continued to move up post the Chinese New Year. The market definitely has that feel about it, and we're looking forward to being able to take advantage of that in respect of the combination of sales and price in our product.
And flowing on from that, another question we received is, what is the spodumene price now, the concentrate price, and how do you see that over the next sort of 11, 12 months? Let's put it this way, give us a price for Christmas.
Well, current pricing, as reported by the pricing agencies, is landed in China, so adjusted for shipping, is probably reported between about $450 and $480 a tonne. That's miles ahead of where we were only 6 months ago, I can assure you, Paul. The momentum is strong, so my take on where the industry is headed is that pricing is going up, no two ways about it. And we've always thought of incentive pricing being in the order of about $600 to $650 a tonne for the hard rock industry to land a spodumene tonne in China. And this year feels like one of those years. There is going to be an incentive price.
And sort of cynics might say that this rising price will draw more production into the market. You know, there's an incentive price threshold. Do you believe that's the case, or are we still some way from that?
Yeah, well, if you think about the growth that's likely to go on this year, last year we consumed roughly 300,000 lithium carbonate equivalent tonnes. Most analysts would say this year it's going to approach 400,000 lithium carbonate equivalent tonnes. So, yeah, plus 25% growth. If you think about that 100,000 tonnes, you need something like 800,000 tonnes of spodumene, but if you're thinking ahead, you need another 1 million tonnes of spodumene. I can assure you there is no number of mines that can be developed this year that will deliver 1 million tonnes of spodumene. It just won't happen, Paul. The phase that we're going through here is another order of magnitude in growth, and it's going to be very difficult for raw material suppliers to keep up.
So is this reminiscent, going back to your iron ore days, Ken, is this reminiscent of the great iron ore boom that we saw last time round, where demand just took off well ahead of supply and there was nothing the producers could do to close that gap?
You can't ignore the fact that there's likely to be volatility. But I think the big picture theme is that the average consumer is now considering the EV. The combination of battery cost and ultimately how that translates to the cost of a car means that consumers will have to consider the purchase of an EV within about the next sort of 2 to 3 years. And given that we expect significant growth in sales of EVs and energy storage becomes a bigger application globally, but especially in China, a lot more lithium raw material has to come out of the ground, and by implication there has to be a longer run in incentive pricing to make that happen.
And one final question, perhaps with a bit of a consumer bent. People are very interested in at what price do you see these batteries for home use coming down. There's all the focus has been on EVs, but is there pressure coming onto the battery supply chain for residential use that will bring down the cost there as well?
Yeah, it's coming. Yeah. And the Chinese have something to offer here. Lithium iron phosphate batteries are a better solution for energy storage or static energy storage than, say, the high nickel cathode chemistries that have been applied, say, in a Tesla Powerwall to date. And that implies the battery packs are going to be much cheaper for the average household. So I'm looking forward to those being packed up. Lithium iron phosphate's been packed up into a sexy looking box. And
how long are we talking now, do you think, before we see a material reduction in
it's less than 2 years, Paul. It's literally on our doorstep now, that change. Yeah. So really fundamental changes coming in the energy market, no two ways about it, because the technology is getting so much cheaper.
Great. Thanks very much, Ken.
Pleasure, Paul. Thank you.